The US and China are locked in a bitter trade war. It began in 2018 with the US imposing tariffs on Chinese goods. The US aimed to reduce its trade deficit and protect American jobs. China retaliated with its own tariffs on US products. This back and forth marked the beginning of a trade war. Both sides imposed tariffs on billions of dollars worth of goods. The US targeted Chinese products like electronics and machinery. China responded by targeting American goods such as soybeans and automobiles. These actions created uncertainty in the global market. The initial rounds of tariffs had a limited impact. However, they signaled a shift towards protectionist policies. Businesses and consumers started feeling the pinch of rising costs. The trade war threatened to disrupt global supply chains. In 2025, the trade war between the US and China escalated dramatically. The US raised tariffs on Chinese goods to 54%. This was a significant increase from previous levels. China, in turn, retaliated with its own tariff hikes. China imposed tariffs on a wide range of US products. These included agricultural goods, energy products, and various manufactured goods. The tariff rates varied depending on the product category. The escalating tariffs signaled a hardening of stances on both sides. The tariff hikes had immediate consequences for businesses and consumers. American businesses faced higher costs for Chinese imports. Chinese businesses faced similar challenges in the US market. The trade war started impacting global economic growth. The US, under the Trump administration, also imposed tariffs on other countries. Canada, Mexico, and the European Union were among those affected. The tariffs targeted specific industries like steel, aluminum, and automobiles. These countries retaliated with tariffs of their own. Canada imposed tariffs on US steel, aluminum, and other products. Mexico followed suit with retaliatory tariffs. The European Union also targeted specific US goods with tariffs. The trade disputes disrupted long-standing trade relationships. The US's actions had a ripple effect across the global economy. The interconnected nature of global trade meant that tariffs impacted businesses and consumers worldwide. Uncertainty and volatility in the markets became more pronounced. The trade war carries significant economic and political implications. For the US, the tariffs aimed to protect domestic industries and reduce the trade deficit. However, they also led to higher costs for businesses and consumers. Public opinion on the tariffs remained divided. China faced its own set of challenges. The tariffs impacted Chinese businesses and could slow down its economic growth. However, China also sought to position itself as a champion of free trade on the global stage. The trade war has created a climate of uncertainty. It has strained relationships between the US and its trading partners. The tariffs have the potential to disrupt global supply chains. The future of the global trading system hangs in the balance.